was down around 2.3% for the week gone by, so some pressure coming in. The Nifty IT also saw a bit of a cool off, 1.6%, but there was some bit of outperformance out there for the IT stocks. The Nifty Bank, though, was the key in terms of weighing down on the index, and we knew this at the end of last week. Banks were going to be critical this week to support the index. Also, there were earnings over the last weekend, and that was also supposed to be the key impact of how the Nifty Bank would respond this week. The Nifty mid cap was down around 1.3%. The Nifty small cap too weighed down in terms of the sentiment. We saw the Nifty 500 also notch losses of nearly 2%, so 1.8%. But essentially, it was the Nifty 50 index which underperformed all of these. The Nifty Realty was one of the top sectoral losers, down 4%. Outside of that, the Nifty FMCG was one of the gainers, one of the very few gainers for the week gone by, around 0.5% odd in terms of gains. The Pharma index saw a bit of a cool off, very, very mild, around 0.4% thereabouts. The auto index stayed afloat, up around 0.5%. It's been one of those which has really stood out through the week. 2% lower on the Nifty small cap, and therefore what we saw was the tilt of the market, obviously being that the large caps really underperformed, and with it you had certain sectors which underperformed quite dramatically. Let me go across though to Darshita. She's here with some of the cues that you want to keep on your radar for the next week of trade.
Right, the upcoming week is packed with market-moving events, with global investors tracking the central bank decisions, key economic data, big tech earnings, and the IPO activity. Now, the biggest trigger will be the US Federal Reserve's policy decision on July 29, and alongside that, markets will also watch the US GDP, the PCE inflation index, jobless claims, and the retail sales data for the clues on the interest rate outlook. Attention will also be on the Bank of England and the Bank of Japan policy meetings, while the Eurozone will release GDP and inflation numbers. Now, on the earnings front, it will be a blockbuster week with results from Microsoft, Meta, Apple, Amazon, Coca-Cola, Samsung, and SK Hynix, which could influence the global technology stocks. Now, back home, the IPO market remains active. Manipal Health Enterprises and Juniper Green Energy will open their public issues, while Extranet Technologies, Indo MIM, and the Luhia Corp will close theirs. Market will also track lock-in expiries for Stallion India Fluorochemicals, Anand Rathi Share and Stock Brokers, IndiCube Spaces, and Brigade Hotel Ventures, as they could lead to the increased stock-specific volatility. So overall, it's a week packed with global macro events and corporate triggers, making it one to watch closely for the investors.
So thank you so much for that, Darshita. So that's really the roundup. But essentially, Sajid, we saw a 9.5% correction in HDFC Bank this week, 7.5% correction in Axis. Infosys was down 5.5%. DRL also came out with numbers, disappointing set, 5% lower. And Interglobe Aviation is down 5% for the week as well. And that's maybe some of the tilt that's weighing down on markets, at least this week. In fact, some of the gainers as well. Let's look at those which have actually done well, right? It's not all gloomy.
I think
6% higher on Bajaj Auto.
FMCG is one,
yes,
where
and auto.
it's where the index is up nearly 0.6% over the week, and then you have the autos where the index is up marginally up 0.4%. But as you said, finance was something of banking and finance was something which was supposed to hold the index this week. It disappointed after last Saturday's earnings. Led by HDFC Bank, and we saw the Nifty Bank closing down nearly Nifty Private Bank closing down nearly 4.3%, followed by Nifty Realty, which was on 4%. The NBFC pack was also not far behind. The Nifty Finance was down nearly 3.7%, and Nifty as a whole, Nifty Bank as a whole was down nearly 3% in today's trade. But we have Deven Choksey joining us. Deven, do you think the uncertainty will keep the market in this range for some time now?
Yes, Ajit. The uncertainty factor, I think, is definitely playing a really spoil spot at this point of time. At one level, we were all hopeful about the crude oil prices remaining under $70 with the kind of ceasefire on the war, etc. And today, that same situation has become ugly again. I think with crude oil prices jumped up to $100 plus, And at the same time, most of the refiners would find it difficult to basically source from other countries, particularly because the logistic cost also would get heavier into this. So yeah, I think I would think that the market will not react positively on any such kind of short-term announcement now, because the fact remains that I think this kind of turbulence in the global trade is going to create a situation which probably we escaped in first quarter, if I have to say that, which may not be so when in the second quarter or so if this is not getting resolved. Logistic cost, entire supply chain economics, I think going for toss. And at the same time, I think some of the companies are going to face the margin pressure, which they haven't seen up till now. In fact, I think in the first quarter of results, most of the companies have benefited from the lower inventory that they carried, but that may not be the situation in the second quarter. So these are all some of the points on which market will remain under check. At this point of time, we would like to believe that 22,800 on the downside is well protected. If market has to go into that direction, it's probably well protected, because the valuation wise, the companies in the front line, they definitely, I think they demand that the market, whenever it turns, I think these are the ones I think are going to be picked up and give a smart return of around 15 to 20% from current levels. So yes, valuations are actually, I think, saying everything. The price is, I think, completely discounted given the negativity.
Even you're saying that there's enough room for another 3 to 5% fall from current levels, given the kind of impact on the earnings which may come in Q2, and if this war continues for the next few quarters as well.
Yeah, I think the war probably, I think, is heading into a direction when there is some kind of a serious outcome expected on the negative side. And that's where probably I think one is worried about, that neither the situation is coming under control, but at the same time, I think there may be, I think, some very negative outcome which can come out of this particular war, which is continuing currently. So that's a time when probably market may capitulate, maybe I think make some panic bottom, and that could be a good time to look into for fresh buying, I suppose.
Deven, also, hi, this is Harsha. Also,
Yeah.
in terms of banks, right? I mean, there's been, 9-10% correction in the likes of an HDFC Bank, Frontline, Axis Bank also down around 5 to 6%. Where do you sit at? Is this an opportunity to actually go out and accumulate some of those names?
Again, the valuation, if one has to look into, then probably they are all fairly discounted currently. Given the kind of a corporate loan book that these banks have grown in the first quarter, and the money has gone into funding the working capital for most of the corporates, from the early announcers of the results in HDFC, ICICI, Axis, Kotak. Each one of them has squarely confirmed that the money has gone into the corporate loan book, where the working capital demand has been on a higher side. Now, if that situation is continuing in the second quarter, third quarter as well, that means that these banks are going to be having relatively on a sequential basis higher growth, which they did not have in the last year. So that way, with a lower valuation at this point of time and the growth continuing to be on a higher side, some of these banks are definitely becoming an ask. It is becoming a buy opportunity in the portfolio. Maybe the downside in the stock is limited. Upside with the recovery in the market could be again 15-20% in some of these cases. That is what we are contemplating at this point of time.
And Deven, public PSU versus private, how do you see that play?
So the PSUs are lucky enough in getting the deposits because of, I think, their complete affiliations with the PSU sector in particular. The PSBs get that deposit advantage. But beyond that, I don't think that, I think, even though they are valuation-wise cheap, I don't think that, I think, my inclination would be higher to buy into the public sector banks. I would rather be feeling more comfortable buying into some of the good quality private sector banks, because the valuation wise they are available cheap. And in my viewpoint, I think the quality always gets the preference. Whenever the turnaround takes place, it is the quality which is bought first. And when it is available at neglected valuation, yes, I think this is a good opportunity.
Deven, we've seen some churn happening this week. Again, defensives were positive, especially in Nifty FMCG, which was up nearly 0.6%. Some tailwind coming for the FMCG companies after a long time. Is that a defensive play coming into play, given the fact that what we have seen is that good volumes have come in for many of the companies?
Indeed, I think the volume play is happening in FMCG companies, along with though the margins have remained literally under pressure for almost all of them, I would say. But I think the volume play is definitely helping them, and the volume is coming in from the tier two, tier three cities where the consumption is actually progressing very well. So, from a perspective of looking at the sustainability of this growth, I believe that I think this is going to be continuing in next second and third quarter as well. Since we are entering into the festive season at the end of the second quarter, probably I think we are likely to see higher amount of growth continuing into the FMCG space. Definitely, spending, the discretionary and non-discretionary spending in the economy is increasing, and that's where probably one would like to stay confident. However, the bigger challenge is a valuation. Nestle and Rivers definitely, I think, are, in my viewpoint, are not available cheap. They are already fully priced. I think, as far as I think their growth outlook is concerned, along with that, whatever I think the valuation at which they are quoting. So that is the one area where we'll have to remain a little bit more careful. Maybe if the market tanks or gives some panic kind of a fall in such kind of correction, that could possibly be a good opportunity to buy into.
Even at a time like this, and you've been here for decades now in terms of the market experience, give us a sense. What is it? What is it that is looking good at a time like this? There's uncertainty in so many pockets, but what would you actually go out and buy, and why?
So her growth, I think, in this country has surprised me. Like many others, I think, are also surprised. In given situation, I think the growth is continuing. The engine is actually firing on all counts. So at times, I think we forget that I think globally we are into such a terrible situation, because the growth in the domestic economy is certainly very high, and this growth is coming in largely from the government related initiatives which they have been actually providing in this economy, be it in the area of manufacturing where the PLI schemes are in operations, be it in the area of manufacturing where the defense and the railways are right now expanding the capacities not only for domestic market but also for exports. And simultaneously, the power and power ancillary sector, the renewable energy sector, there again, in my viewpoint, I think the government is enabler. We are spending significantly large amount of money behind creating this kind of situation. To my mind, I think the manufacturing segment covering these sectors is definitely going to be a winner in this particular critical situation, and that's where one would like to remain invested in the market. And market is giving sideways correction at this point of time. Panic bottom for any reason which I've been repeatedly saying, if it happens, then definitely it would be a good opportunity to buy into some of the sectors in the stocks therein particularly.
Uh, One sector which stood out was defense. Do you see there is still room for stocks to run up in that sector?
So my take is that defense companies are showing good amount of visibility of order inflow, and at the same time the execution visibility. So that is a very positive sign, first and foremost. However, having said that, I think they run into some amount of challenging situations simultaneously, because domestically the only buyer is government, and part of the export has already started in some products, which is again I think through the government and government related companies. So from that perspective, if you look at it, the companies which are into defense play, supplying to government stroke government related companies for exports, they are actually working in a relatively tighter kind of a growth spot. If economy is growing at 10, 11%, and defense possibly is having with higher amount of order inflow is growing at 15 to 20%, I would think that I think that would be the upper limit of growth, at least I think in the near future. not because of anything else, but the ability of the government also to absorb higher amount of production stays confined or limited in a given situation. So I would not like to give fancy valuation to defense companies. Defense companies are good, but at a fair value, and the fair value is probably missing in some of the counters at this point of time. So one will have to be waiting for an opportunity in this market to buy into these stocks. Maybe some correction in the price, which I'm expecting, it could possibly be a good opportunity that one can ask for.
Deven, I'm going to pause this conversation for just a minute or two, take a quick breather, come back, continue this. It's a very engaging conversation, positive with regard to defense. Consumption, well, positive, but really the worry is valuation. So maybe if you get decently valued stocks in the consumption basket, something to play. That's really the takeaway. Stay with us, more on the other side.
Welcome back. You're watching Market Edge, and we still have with us Deven Choksey. Deven, one sector which stood out today this week was the auto and auto ancillaries. If you look at the Nifty Index 50, which has a higher component of auto ancillaries, it was the outperformer sector there. What's your view on the auto ancillaries?
Well, I think the view remains positive and will remain positive for some more time to come as well. The OEMs are actually seeing a good amount of traction, be it in the area of two-wheelers, three-wheelers, or passenger vehicles, and even for that matter, commercial vehicles, including buses. A good amount of traction is also being felt because of the fact that the pattern is changing for buying. The electric vehicles have been, I think, significantly large amount of contributors into the portfolios of companies like Bajaj Auto, for example. 30% of the revenue has now started coming in from electric vehicles and including from three-wheelers and three-wheeler commercial vehicle as well. So from a perspective of looking at the business opportunity into some of these companies, the ancillaries who are catering to the larger OEMs, we see a good amount of order book pipeline getting developed for them because many companies are talking about adding new models in the market, starting from Maruti onwards to any other company that you take. I think everybody is talking about adding few more models in the market. And that's where ancillary on a per kit value basis, I think are registering higher claim in some of these models. And we like, I think, the companies which are pure play into the electronics embedded systems, which is basically getting into the vehicles, the two-wheeler as well as four vehicles, in a systematic manner. And the higher component, higher kit value is happening because of that. Likes of Minda, likes of Minda Corp in four-wheeler and two-wheeler respective categories. I think such kind of companies are actually showing a good amount of growth traction in the ancillary segment. So yeah, selectively we remain positive about the prospects going forward. Though must say that valuation-wise, most of these companies are actually priced today. But market opportunity one can't rule out. So yes, you can select such kind of company in the portfolio for buying, and the market gives an opportunity, and it's some amount of time, if at all.
The other sector which was in news today also about pharma. Do you see good traction coming in for pharma? Dr. Reddy is disappointed. Cipla was decent, I would say. How do you look at pharma?
So sequentially, both these companies have registered growth. On a YOY basis, I think the growth has been on the lower side. Maybe I think because of variety of reasons, of course. We remain distinctly positive about the growth prospect for pharma on two reasons. One, of course, I think important part, whenever the pharma companies, Indian generic pharma companies are available at a valuation which is at they are putting to the likes of Dr. Reddy particularly, I feel that I think the market rewards them in subsequent period of time because of the normalization of situation. One point. The more important part, the complex generics is definitely showing higher amount of growth for most of these companies, and they are showing that kind of visibility in their order book as well. And last but not the least, I think the key tailwind which I see as a very strong tailwind emerging now, biologics and biosimilar portfolios in some of these companies' case are definitely suggesting a very close look at it because next 3 years from now on is likely to be seeing significantly large amount of opportunity opening up for them for some of the products which they are right now having in the portfolio, which could possibly start showing similar kind of an opportunity which I think they saw during the COVID time, or similar kind of opportunity that they are seeing right now in case of a semaglutide. So such kind of opportunity in biologics and biosimilars definitely is likely to happen in next 2 3 years time. So we like these companies from that perspective, and believe that those companies which are strong players in CDMO and API segment along with will definitely have better times along with I think some of the complex generic pharma companies.
Devin, the other thing which really, I mean, our own news channels haven't spoken enough about is railways. I mean, it's been a while since they've really been in vogue. What next, and how should you play that theme? Of course, there's been a bit of a topping out, wheel set issues and the like. How are you looking at it now?
I think railways possibly is in a similar situation in which I think the auto industry was in 80s and 90s, wherein I think you started modernizing the vehicle, and subsequently I think the premiumization of vehicles started taking place in those days for auto companies. Railways actually I think getting into a similar kind of a league today. We are talking about putting in significantly large number of Vande Bharat train, which is domestically developed. We are talking about high-speed trains like bullet trains, which we are likely to be, I think, starting now in next 1.5 2 years time. So along with these particular new trains, new generation of trains, a complete infrastructure is getting built along with. And the ecosystem players like some of the railway ancillary companies are definitely showing a very good signs as far as I think their order inflow is concerned. Only limiting factor here, like in defense, the government is largely the buyer. And as a result of which, I think the ability to buy in a given year cannot dramatically go up because of the budget finances, etc. So from that perspective, if some of the railway ancillary companies, if they start showing growth in the direction of around 20% upwards, definitely I think they become a good opportunity to buy into the portfolio, subject to valuation not becoming expensive. If valuations are comfortable in some cases, then certainly I think one would like to look into those companies.
One another sector which has been doing well and it's buzzing is the power and power ancillaries which are there. Your compressors, pumps, diesel engines. Do you think that's the AI play which is playing out, and there is enough room for that? And during the week, if I'm not wrong, even ABB Global had come out with good commentary about the India operation numbers.
Yes, spot on, Sajid. I must say that I think I have never seen in my 4 decades of association of remaining invested in something like ABB and Siemens for so many number of years. I've never seen this kind of inflow of orders going into their books. And that does validate the point which I was making a while back, that higher amount of traction is coming in from all sides. I think now the power and power ancillary segment also is significantly large amount of traction. On one side, we are talking about putting in 500 gigawatt of renewable power capacity. Along with the renewable power capacity, comes along with it is the transmission, that is evacuation and distribution of the power that will come along with. And as a result of which, country is significantly putting in large amount of transmission lines at this point of time. Some of the ancillary segments like meters for that matter, transformers for that matter. I guess I think each and every cables, power cables along with each and every ecosystem player, they are today getting significantly large amount of order inflow because of this particular drive that the country is experiencing. The data center which you particularly mentioned, in my viewpoint, I think this is going to be a story for next 10 years.
Right.
Because what India has just now started is a very small data center related activity in the country. To me, if one wants to go with the global trend, 45 gigawatts of data center capacity of 2025 is becoming 260 gigawatts of data center capacity by 2030 globally. So India would be a large player in this space as well. So again, I think the entire power ancillary chain will start working in that direction. In my viewpoint, yes, I think it's a good opportunity. Maybe everything is priced in today in the market. That's the only one line point which I keep repeating. But the fact is that opportunity-wise, there is no dearth. I think we'll have to look into some of the companies. If at all they give the price correction, it will be a good opportunity to buy into.
Right. Okay. Deven, thank you so much for coming in, giving us that perspective. Of course, always good to take a bit of a step back and look at markets with that renewed lens for the renewed week.
Thank you. Thank you, Harsh.
Thank you. And viewers, of course, you'll have plenty of earnings as well trickle through next week. We spoke about that. But let's go across, in fact. Here is the latest with regard to Maharashtra 360.